It's good to see you, Jim. So you're not buying all the soft landing excitement?
I think we could have a soft landing, but at the end of the day, the number of new jobs are slowing. The job openings are starting to fall. Wage increases are declining. And all that pent-up savings is being spent down. So I think the next couple of years are going to be way tougher for the consumer than the last couple.
I think that was highlighted to some extent. The last couple of days, we've gotten a series of figures out about real incomes, how they've been declining for 3 years, how the poverty rate was up sharply in the past year. So, yes, we know that consumers still have more cash than they might have pre-pandemic, but we're starting to really get a sense of the challenge that we have been in and that we face, I think.
And we're certainly seeing a bifurcation in terms of the lower end and what you're hearing out of Walmart in terms of groceries being the standout, or the dollar stores where consumers are turning to food items and the absolute must-buys. So the low end in particular is really stretched right now.
What about economic growth overall? Some forecasts are pretty high for this quarter.
The GDP now number is fantastic. I'm a little bit surprised because you look at consumer sentiment or sentiment about the broader United States, it's really negative. The overall sentiment here is not as positive as a 5.5% GDP quarter would seem to suggest.
So how do you explain that? Is it as easy as, okay, I'm okay, but you're not? In other words, that people often say that their mood is not as good as what they ultimately turn out to do, or they or their neighbors. They always say, oh, I'm going to spend less on Christmas this year, and rarely do they.
Oh, that's certainly an issue. I think when you look at some of the numbers, it may be some inventory or rebuild, and certainly the consumer's not seeing that. Certainly the political discussion in our country is not helping sentiment either. But as I look at company by company results and the huge disappointment at Dick's and the huge disappointment at Foot Locker, the overall consumer doesn't feel as healthy as the underlying GDP numbers suggest.
And so there's a lot of names, maybe you just mentioned some that you'd be, or maybe the whole space you'd be cautious about, but it's not to say you'd avoid everything. Some of your favorites are familiar names here that we hear a lot of bullishness about, like TJX. You also like Constellation Brands. We talked about that one the other day as well. Amazon is up there. So, I mean, there are some plays here that you think can still kind of weather the storm.
Sure. Coming out of the second quarter, I was really excited about what we heard from Amazon. Your cost to deliver each package went down materially because they're handling it less and driving fewer miles. Coupled with one-day delivery means basket completion rates are up significantly. So you're having this positive flywheel of lower cost and higher revenue growth. That's really exciting. And I think operating margins at the retail business in the U.S. really could surprise for a number of years there. So that's one I like. You mentioned TJX. The consumer is looking for value, and TJX is providing that. And the buys that they're getting from manufacturers is just fantastic. So again, that positive flywheel keeps on spinning.